Money Miners. Geez, the bloody first day anniversary of the Director's Special. Head to moneyandmine.com and get that up, ya, mate. The top job on the newsletter, boys. But we'll talk about that shit later, mate. What do we got today? Karora, yet to know who Karora is in discussions with.
Yep, more rampant speculation from Money and Mine coming.
We know that they've ceased talking with Ramelius, but they've signed exclusivity with someone else. Is there some gamesmanship? We're going to unpack it all, Matty.
Love it. What else we got, boys?
Well, on the deal front, mate, Hammer and Carnaby have come out with a deal, but it's not a merger, so keen to unpack that one. And there's more on the deal front. Nickel Mines, mate, itching its interest higher in ENC. JD's going to talk about some shareholder activism via a 249D at Vintage Energy.
249D.
JD.
We should have a special bell or something every time we talk about 249Ds.
Look at you getting in on C. Hey, we can do any role in the organisation. Good to see.
Yeah, that one at Vintage Capital is particularly interesting. We're also going to talk about Catalyst, the gold miner, or wannabe sort of gold miner, and a bit on their working capital worries.
They are a gold miner. Like. 2 gold mines, mate. Neither of them are super exciting.
Want to be a gold miner of scale, rather, is what they're striving for. Yep. We're also going to chat about AIC, another small-scale miner who are striving for scale.
You know what they've got, JD? Talk.
You must have read the show notes, mate. They are, absolutely geared to the copper price. So touch on it, and also Paladin, a bit on the U front. We're going to talk about a company reaching commercial production. Langer Heinrich again being in production. Obviously, it is a previously producing asset. And Trav, you're going to touch on Whitehaven, who have now got their hands on Blackwater and Daunia.
Oh, just bloody strap yourselves in, Money Miners, mate. Right, let's start. Karora, it came out last week. I think we briefly covered it, but they ceased discussions with Ramelius about the potential transaction there after it got leaked to the media before that.
For those wondering, Karora is not an ASX-listed company, so you won't find it.
But they sort of want to be.
Clearly do. Obviously got a strong WA interest with their assets.
And how are they going to do that now? And it was, as you mentioned, the possible gamesmanship, as you said, Trav, in Karora's announcement saying that we've ceased discussions with Ramelius, but we're now in exclusive discussions with another party regarding a how did they word it? Business
combination.
Business combination with which, I don't know, does it lend itself more to a merger of similar size rather than a takeover? Has this opened up the door for Westgold?
It's a bit of a word on the decline. That's
seems
a name
to
that
be the
keeps
one
coming
getting
up.
thrown around the most.
Yeah, that one does.
Is that me?
Partially you. I think other sources as well. I don't know if they got it from you. But a lot of people have been mentioning Westgold amongst the conversation here for a party that's put their hat in the ring for Karora.
Do you think not many, like, there's no regional synergy, but there's the underground mining synergy and the re-rate, which we'll go into. Because interestingly, Westgold were the ones that sold Higginsville to Royal Nickel Corporation, RNC, which for $50 million, which changed their name to Karora.
I did not know that. Fun fact.
So Westgold, that was from that whole Avoca. What was the one before that? There was Avoca, Alasa, I think it was.
Oh,
and that all become Metals X Westgold.
Right.
That was Higginsville.
Wow.
Yeah. That's where that was one of ACM's big contracts. And
there
then obviously Westgold took ACM.
So Back to the Future it would be if that were the case.
So they might end up back in that hand. Who knows?
I think the only merit for Westgold is, like we've talked about it a lot, their scrip is massively re-rated, and like when you've had that sort of, you've got a healthy valuation in your scrip for assets which, throughout the course of a gold cycle don't always command such a valuation. You want to use your scrip while it's valued highly and, buy stuff that can enhance your corporate profile in the process, hopefully get something that's lower on the cost curve, which, Beta Hunt is for the time being. So.
Yeah, and I saw one note saying the pro forma, if it was Karora and Westgold, don't listen to everything I say in the Hootaroo chat. It's not going to always happen. but that would be $2.3 billion pro forma company if they did merge, which would see it obviously a lot more buying from the GDX, which Westgold are already in, but inclusion into the ASX 200. So Gold Rotor, I think they were the lowest of the ASX 200 at 1.7 billion market cap. This put 2.3, so and ASX 200 gets a lot more buying happening than the GDX, from what JD told me.
I don't know if it's as straightforward as it's just your market cap, Matty, because the ASX threshold is free float, but there's also a relative liquidity metric. And in the case of, like, if you do a deal with Karora, well, if it's a scrip deal, then the Karora shareholders who are largely based in Canada, do they get a CDI? Now, if that CDI trades on the TSX and it's not straightforward that you are, like, that liquidity is transferable to the ASX and it's not like you're immediately eligible for the ASX 200, it's a good point. You are eligible for more things, but I don't think it's as straightforward that they would be eligible for the 200.
Yeah, right. But ones with CDIs over there, is there a time that has to lapse before? How does that work?
Yeah, I mean, most of the times when an ASX company merges with a TSX company, and you just want to retain this. Let's say you retain the ASX as your primary listing, then everyone on the TSX gets a CDI because a lot of your shareholders are over there. And if over time you find liquidity sort of drift towards one exchange as dominant, which typically is the case, then after a couple of years you might choose to delist the secondary listing because you're actually not getting much liquidity over there.
So would they have to? So there's still a possibility they could go into the ASX 200 whilst having the CDI on the TSX.
I'd have to look at the metrics, but
it wouldn't rule it out by default. That's for sure.
Yeah, they're definitely more eligible for larger index inclusions as a result of doing a merger.
Yeah, because obviously Westgold's a lot there.
1.3 to 900 mil.
Yeah, so they're not heaps bigger.
Yeah,
but the bigger party.
Yep.
Yeah.
Yes, that's right. Yeah.
Who else is in the hat in the ring, do you reckon? That's one. And just from that, I guess, re-rate side of things in the underground, probably Pantoro is another one you hear rustles about. Westgold interested in Pantoro. Pantoro they're in that region. So, Norseman's down the road from Kambalda, so it's sort of close. But obviously I think it's, what are they, 58 kilometres from Karora's Higginsville mine.
Yep.
But
it's
Pantoro's
spread, of course.
Yeah, Pantoro's only, that Norseman mill's only 1 million tonne. They've been on a bit of a run of late because they're pretty much unhedged and fully exposed to the gold price, which is $34.70 an ounce today.
Talk about talk, Matty.
Mate, talk. But dude, colourful ramp up for Pantoro, but hopefully heading to the point where they're making cash. But that's another one that's been thrown around. Maybe Westgold would have their eyes long term on both to create a bit of a separate region to the Murchison down there. Who knows? You take one, you take the other.
You can only do one deal at a time, Matty.
Oh, can you?
You technically could do a three-way scheme of arrangement, but it just doesn't work.
You're a 1.3
menage de trois, as LGC says.
You're a $1.3 billion company. At Karora's a 900 million. It's got to be a bit on top if you want to, unless you're doing a merger. And then Pantoro's almost 400 million market cap.
330 today.
Yeah. The question is, are there regional synergies? The answer is there probably are, right? They're close enough that you could probably figure out some regional synergies there. Is there I don't think we've seen a quarter out of Pantoro where they've had proper cash flow generation. I mean, sure, they might have shown neutral operating cash flow, but the capex was still
cash in and cash out.
I think there'd be a couple Pantoro shareholders who'd be happy with a takeout.
Totally. And the share price has changed in the last month in a way that makes you think that someone's thinking that the tides have turned there and they might be making cash. So I'm sure they would. Yeah, I'm sure that would make sense for Pantoro, to be honest. But whether or not that would be the other thing too, right? Is I wouldn't discount this all just being gamesmanship and Ramelius. If negotiations with Ramelius ceased, it's probably because you couldn't see eye to eye on valuation. And why couldn't you see eye to eye on value? If you couldn't see eye to eye on valuation, what do you do? We seized exclusivity, but we're in exclusivity with someone else, and you just try to create a bit of competitive tension so that Ramelius come back with the actual offer that you really wanted. So I wouldn't discount that as being the actual game plan here, and this could just be a little bit of a look over here.
But do you think that after Ramelius saying that discussions have ceased, then they'd come back to the party after saying that discussions had ceased?
Yeah, seized at that price at that point in time, and
Yeah.
and the exclusivity's gone. Someone else has got it, right? That's like a. But I wouldn't rule it out. Like sometimes wait until what happens with this exclusivity. Because that could
negotiation.
That could seize as well. It's just it's. But what it really is just like an admission that Karora is up for sale. Like that's the reality. This is a sale process for a publicly listed company to an ASX listed gold miner. Take your fucking pick.
Who else you reckon? You're scrapping. I know Goldfields are just down the road at St Ives, but they're looking at big operations. Doesn't fit the Goldfields mould.
There's no one else logical, right? It'd be people like Westgold who are doing it for scale reasons and these other sorts of reasons, right? There's no one else to benefit from synergies.
No. And even though Regis are in a trading halt still from last week, pending that McPhillamy's DFS, so it's pretty explicit that is for the DFS. So you don't think it's them.
It'd be conveniently timed trading halt for them, but I think there might be a bit to roll through the market in relation to that DFS and potentially a complete kind of funding package. Think potentially debt and equity and DFS numbers all come out at the same time and FID. That would be the perfect way for them to come out of trading halt. But I don't think it's anything to do with Karora.
No,
that would
bit of a
explain the
book field
time.
going on maybe. Mate, imagine left field develop. That's left field. The bloody cement.
I'll bet you that won't happen.
I would bet that, but that's bloody left field.
What about Spartan,
you got to
mate?
always
Spartan.
think about the ones you'd never expect. The bloody developer got there. They just have a little bloody Goldfields hub going on there with Beta Hunt, Mount Marion, and Pioneer Dome. You never know, but that's bloody long shot. But you got to mention it because if it happens, I've got the snippet to replay.
You look like a genius, yeah. Or you could just play a snippet of you pretending that you said it, but anyway.
Just to edit the video. Spartan, nah.
Could you use the cash flow from Beta Hunt to fund to fund Spartan? Then you got 2 high grade underground operations.
It's a possibility. That's a possibility. See, bloody old Craig Jones is at Spartan now.
Did see
Jeez,
that.
who would have thought that?
Mate, did you see the bloody snippet from that one? The quote. Spartan took on the world and won.
And one.
Jeez, you're bloody pushing the friendship a bit there, I reckon, with that sort of level of promotion. Fuck me dead. Anyway, either way, however this marries up and whatever pro forma gets included in the 200 or the 300, mate, 100% that DSI will be supporting the bloody ground of the underground mine or the pro forma or whatever because... you want to know why? Can you imagine getting into the ASX 200 or even just the ASX 300? Everything's smooth sailing, and then you have a disruption to your ground support supply, and then you fall out of the index because the same thing happens on the way out. Shitloads are selling, all because you didn't have DSI as the ground support provider, mate. That is that's an easy box to tick if you're looking to get a re-rate and get into the index.
So if you want to be a top tier mining company, Matty, you should just use the best ground support in the industry.
Mate, that is speaking of criteria to get in the indexes, Trav.
Yeah.
That's also one of them.
Hey,
I think
DSI
S&P
is
look at that. I think they look at it when they're
Yeah, mate,
checking off.
CDIs and DSI.
question without notice, Matty. You tell me that like gold mining, your ground is good. You don't typically you don't need much ground support.
Not always, but
you
most
tell
of
me
the
nickel
time.
mining, you need ground support because the ground's shit. Well, Beta Hunt used to be fucking a nickel mine and now it's a gold mine.
Nickel could just pop up.
So they need ground support.
They need ground. You just never know, mate. The nickel's still there, mate. Everywhere needs ground support. Everywhere needs to use DSI. Just get that in your head. Don't forget about it.
Doesn't matter what you're mining.
Mate, our first birthday is coming up.
Yes, we have a special announcement.
Yeah.
Matty, what are we doing?
I don't know. What are we doing? Thursday, Harvey, we're getting on the piss at, where are we?
Brewdog.
Brewdog West Perth. Yeah.
In West Perth.
They're not going to have dingo, are they? Do they have dingo?
They might. No, I don't think so.
No, they're a competitor.
Anyway.
Oh, righto.
But
I
yeah,
might come.
our first episode was on the 3rd of April last year. And yeah, so we're pretty damn close to doing this for a year. So we're just gonna have some drinks, and if anyone is floating about and wants to have a drink with us, sort of ad hoc at 5 p.m. on Thursday, then we'll be at Brewdog in West Perth.
Yep.
Yeah, it's
Might
no
even-
speaking, no event, no nothing. It's just we're just getting on the piss and
No tickets or
that's it.
anything.
Just come see us.
Might even be 4:30.
I bet you I could pick 3 people I know who guarantee will rock up. I'm not going to give them the justice, but when they rock up, I'm going to say, yep, that you were one of the 3. Know exactly who they are. They're all female too. Mate, another one. If you subscribe to the bloody Director's Special, the new newsletter, and you'll see at the top, you've got your own GC number.
Everyone's got one.
With Trav and Ali GC went to a lot of work to collate all the old from the hat sales and put those GC numbers to all our existing subscribers. But, you know, some people bought multiple hats, so we didn't know who the hats went to. So if you subscribe to the newsletter and your correct GC number, that the hat that you own is not on there, email info@moneyandmine.com and we will fix it up for you. And if you haven't subscribed to the newsletter yet and you are a GC hat owner, go to moneyandmine.com, subscribe to the newsletter, then flick us an email just to say, I am GC, yada, yada. There's shitloads of numbers. I'm not going to read them out.
Should we make him send a selfie wearing the hat with the number?
Oh, yeah.
No.
Any fraudulent hat claiming, it will be punishable by not being a GC anymore.
All righty, let's talk about another deal.
SC. You'll get an SC number.
An SC. Oh.
Hammer Carnaby
We
Trav.
should do some SC hats.
That would be pretty
Jeez, fuck, it won't be hard to hand 100 of them out to friends of the show. Righto, anyway, we digress. Hammer and Carnaby deal emerges. What's going on here, boys?
You remember the leaked, talk about leaked deals. So remember the leaked deal talks between Hammer and Carnaby regarding a potential tie-up? Well, today we've got a deal on the table at last, it appears, and it's not a merger, but instead an asset-level deal, essentially. If you guys remember, we speculated that Hammer have wanted to do a deal for a long time here, but in fact, they needed to do a deal. They were running out of cash, just $1.8 million in the kitty at 31st of December, but Carnaby were apparently they were less amenable to doing a deal with Hammer from what we'd heard. So recall Carnaby's Mount Hope is a little postage stamp within some of Hammer's tenure, at least. That's just Carnaby's Mount Hope. They've got other stuff. And if you see here in this picture, the optimised pits on the resources within this tenement, they actually extend over the boundary into Hammer's ground there. This deal that we see today will see Hammer sell an initial 51% interest in the Mount Hope blocks, or 3 of them, to Carnaby for $4 million in cash and $9 million of Carnaby shares worth about $5 million. A further $5 million will be payable on any decision to mine, at which point Carnaby's ownership would increase to 70% in those little mining blocks. And a contingent kicker of $6 million cash is payable if there's a separate mining development on the sub-blocks down the track. Now, the most interesting part of the announcement to me is actually this excerpt from Carnaby's. It basically shows the hardball that Hammer were playing to force a deal here. I'll read it out. This is Carnaby saying, importantly, upon acquiring its initial 51% interest, Carnaby will have the right to access and conduct exploration activities on the sub-blocks, which it considers necessary or desirable for the future development, exploitation and optimisation of any Mount Hope open pit development, and unfettered access to incorporate the sub-blocks into any open pit cutback for a development of Mount Hope. So that there is, in sort of clean English, a bit of an admission of what the real hold-up has been for a long time. Like, word on the decline was that Hammer didn't provide Carnaby with access rights to even drill out the resource from their side of the tenure before. And like pretty much there, it's like, heck, now that we're actually going to own 51% of these, as soon as this completes, we can do the exploration that we need to do in order to get this thing into development in the first place. So the backdrop of all this is that dynamic in Queensland surrounding Glencore's actions at Mount Isa. So remember, Glencore announced that they were shutting down a concentrator there by the end of the year. And, in the lead up to that, they'd done a bunch of work to try and secure enough third-party feed beforehand. Now, we're talking to a bunch of people. There is a sense that the concentrator there may be still kept on if there is enough volume to send through it. And also, there's a potential sort of government support, that could come its way as well. So if you can get enough volume and you can get government support, like that concentrator could be kept on. And ultimately, that concentrator is the logical destination for feed from this Hammer Carnaby kind of location here.
Is both the concentrator and the smelter being turned off, or is the smelter still going?
Smelter's still going.
Smelter's still going. It's just the concentrator.
Yep.
At the start of it. Yeah. Right, head across to Indo, the nickel heartland of the world today.
Yeah, mate, this deal sort of played out as expected. This is all in line with the scheduled structure that was put forward a little while ago. So Nickel Industries are now 27.5% owners in the Excelsior Nickel project. So they increased it by another 13.75% in the past couple of days. So for this additional stake, they had to pay US $316 million. So to do that, they drew down on US $160 million across two tranches from this $400 million facility that they have with an Indo bank. So the payment, like I said, in line with this schedule of going from 0% interest up to 55% interest by the 1st of October 2025. So the next step is for another US $380 million to go out the door in 6 months' time. Now, separately, they also had to pay back principal and interest totaling $253 million from notes that expired this month. So all that sort of said, that's some pretty large capital outflows that we've seen there. They ended the year last year with US $780 million in cash and $845 in debt. So net debt position of 66. Now, with everything sort of done today, that net debt position has changed to US $634 million. And that doesn't factor in March, which was a particularly weak quarter given what we spoke about a couple of weeks ago. There was limitations and there was a big hold up in getting permits across the country. They had their national elections and whatnot. So those numbers don't factor in what else happened in the March quarter, which we'll find out this month in the coming couple weeks. But going off consensus EBITDA, it puts them at a net debt to EBITDA position of 1.6 times, which, you know, we spoke about it before. I don't think it's reason to be too concerned. Nickel is in a real trough. It's sort of eaten into the cost curve already. It doesn't look like there's scope for that to drop off too much further. Matty, I can see you're sort of giggling away there.
I'm not giggling. Got sidetracked about something. I'm listening. Sorry.
I'd also seen some comments, gents, on the weekend about nickel coming from Indo's Deputy Minister of Investment and Mining. Here's a little snippet. We don't see any reason why we should not expand production of nickel for battery materials. So there is no slowing down on their front in production of nickel, and they've already attracted BYD to come in and build an auto manufacturing plant to build cars in country. So their plans to be fully vertically integrated aren't slowing down at all. And you know, it's just going to continue to put the sword in all these other projects around the world. They specifically spoke about low nickel prices being something of interest to them because they want to incentivize these car companies and these battery makers to maintain the use of nickel in all the chemistries going forward. So it's not letting up anytime soon. And yeah, I mean, I wouldn't be surprised if we continue to see this nickel price stay below 20,000 at least for quite a while to come.
There was the article this morning saying that they want to head towards 1 million tonne of nickel output from Indonesia.
Yeah, there was
phenomenal.
There were some good ones from the Financial Times over the weekend, and another one in the Australian by a journalist who had been with Nickel Industries actually to Indo about just the scale and the growth from a couple percent of global supply up to 55% of global supply in, you know, less than a decade.
That's wild.
Isn't it unbelievable that they're like, no, we want to just keep these prices right here. We don't want to make more money. We just want to take over the whole global nickel industry.
That's taken a long-term view.
Isn't it unbelievable?
Is it a long-term view though? If there are some concerns about geographic, concentration of supply, then if you kind of squeeze out most of the other market from producing anything, then...
I mean, I'm not sure if they said explicitly they want to be 100% of the market, but for their interests in getting car makers in the country, getting all this happening in the country, I think they're betting on the West being too slow to actually do anything about it.
Yeah.
So.
Interesting.
And even if new supply come on from the West, how much of a void is it ever going to fill compared to how much they are putting out? When they're pumping 1 million tonne out, you can't just create another Nickel West to put out 70,000 tonne. And remember that Nickel West 70,000, a lot of that's, some of that is purchased from other parties. It's not all that BHP's putting out. That's what comes out at the smelter. It's setting up for another bloody uranium situation, boys. Nickel is the new uranium. Bloody AIC Mines, old Jericho grows.
Let's fly back to Queensland copper after the Hammer and Carnaby segment. So AIC Mines, this came out late last week. Jericho was the key asset from Demetallica, which they picked up in late 2022. Now it complements, we'll show on a map here, the Eloise mine that they have. So AIC very much on that growth, on that investment path. They've now got resources totaling a bit over 20 million tonnes at 2.1% copper and 0.4 grams per tonne gold. 2/3 of those resources come from Jericho. The majority comes from Eloise and some high-grade tonnes coming from Lens 6 as well. So the latest announcement nearly doubles the reserves at Jericho. So reserves are now 3.2 million tonnes at 1.9% there.
Yeah, right. That's bloody JD. That is evidence of what exploration can bring. Look at that. Double. Mate, they've drilled holes, they've grown their resource, they've grown their reserve, they've increased their mine life. We don't bloody talk about K-drill for no reason. This is what they do. This is the result right here. Look what's happened to AIC. You could have that happen to your company.
Share price has ticked up quite a bit. You could arguably say the drilling. That's what did it.
Just from the drilling.
Yeah.
Mate, get K-Drill to drill some bloody diamond RC or aircore holes into your ground. Give yourselves a chance. Just do the right thing.
Yeah.
Just having Ryan O'Sullivan on your site
You gotta buy a
should be
ticket.
good enough.
That's it.
But while he's there, him and the K-Drill boys can punch some holes in and you could pretty much do what AIC have done and your share price will go up. So get in the race. You got to have your foot in the door. Anyway, back. Sorry to interrupt, JD.
That's more than okay, matey.
Talk to the copper price.
Talk to the copper price. So when you look at
mate.
the ASX copper producers, when you're talking about talk, you're looking at the higher cost ones, the smaller ones. They can really fly in a bullish copper environment, and AIC has got to be pretty high up on that list. They're going from being a 12,500 tonne per annum copper producer and a 5,000 ounce gold producer. The plan is over the next couple of years to get to 20,000 tonnes of copper and 7,500 ounces of gold. Now, they've explicitly said they need to spend $90 to $100 to get there over the next 24 months. So December 31st, they had roughly 27 million in cash. Now, they're talking about sussing out debt providers, concentrate offtake providers to get the financing to come together. And we should see this quarter funding come together and then final investment decision be made on Jericho. So for reference, you would have seen on that map earlier that Jericho sits only about 4 kilometres away. So they've got mining studies underway. They're going to design a haul road to connect the two. And then at Eloise, they're going to expand the plant. So a study coming out for that pretty imminently. That's going to go from 725,000 tonnes per annum up to 1.1 million tonnes per annum. So like I said, $25 is currently what they've got. They'll need circa 100 to be spent over the next couple years. Some of the more friendly brokers out there are not factoring in any equity dilution over the coming couple years.
You can't include that if you want to get
the
a
deal.
ticket on the
You got to be
equity
friendly.
deal. You want to maximise your NPV per share.
If you really need it, we'll help.
Yeah.
We can help.
Exactly. So I find that astoundingly hard to believe. And that's just, given the sort of scale and the risk involved in a business like AIC Mines. I think they're like a well-run business. They got strong inside ownership, but they've been putting the polish on lately. It just smells like the financing is coming together and the timing's right for it all to come together. So I'd anticipate, a more natural sort of debt and equity split.
Combination.
Yeah, exactly. So hard to put a number on, but certainly not thinking 100 million purely in debt. That would be pretty unfeasible.
Well, put your copper managing director strategy hat on, boys, and think if in the copper market, how many times do you hear about, this company's got a fucking shit offtake with so-and-so, like for copper, they got them by the balls, or you just hear about shit offtakes.
Yes.
But that is a result of getting debt or offtake financing or things like that. What would you do in this position with AIC with this impending copper price going up? If it does, we don't know. But to keep the maximum torque and leverage to that copper price would you lean towards doing a lot more equity than debt?
I think AIC is a really interesting stock for the reason that it's you've got operating leverage, like it's a high cost producer, we know that, but you've got a growth project that's coming online, but you don't have balance sheet stress. Like you look at other potential plays there, like a 29 Metals, heaps of talk, but there's balance sheet risk as well. You combine the operating leverage with the financial leverage. And what is interesting to me about AIC is you don't have that financial leverage. They're gonna put some in there at some point, but like for me, my personal like risk tolerance, I prefer to see that debt profile look modest in the context of the whole thing. I do think whatever debt they put in it, they'd be pretty prudent about ensuring that it's serviceable. But I'd be more leaning towards more equity than debt in financing it. And I think like Jericho it's a big deal for them in a lot of ways because you always talk about Eloise and it's fucking deep, right? It's fucking deep. So Jericho is not.
Yeah.
It's like it's close to surface. So, you can pretty meaningfully improve your cost profile on the tons of copper you're producing as a result of sending that through the mill.
Yeah, I think that's pretty well said. I mean, we were kicking about numbers of the debt to equity split. I think in terms of a risk balance, obviously the guys there know their business far better than we do, but that a sort of 40-60 split is kind of what we'd had in mind. And I mean, at the end of the day, you'd look at all those other forms of financing and just work out how expensive they are. At the end of the day, we've spoken at length about how companies try and dilute down what the financing is actually cost them, whether that be through a gift of cheap options or shares or whatever on the side. But I think it'll come together fairly vanilla, debt equity and maybe a small amount of offtake financing if they can sort of swing it. And yeah, this would be just the next step on the way. There's also another element of the story with AIC, these environmental bonds. We don't know the exact scale of company that you have to be at for them not to apply to you. I mean, not that you don't have to pay for these things, but they apply in a different way. For these smaller companies, we know that they have to sort of have this capital put aside, and that can be a bit of a financial limitation for all the smaller companies in Queensland copper.
Yeah,
so
you've got an environmental bond that you have to cash back, which is just a big drain on your capital as a junior.
So if they can get to sort of scale, again, we don't know what that exact number is, but if they can get there through other means and that not be such a limiting factor to them, I'm sure Aaron and the team there would be looking at various ways in which they can achieve that scale.
Interesting. Everything's interesting that you boys talk about, I find. And JD, you venturing into the world of activism.
249D.
But you're actually bloody, you might even get a bald patch if you keep doing that. You'll start transforming into Trav.
Let's hope that doesn't happen.
What's going on with Vintage Energy 249D?
So Vintage Energy have a substantial shareholder in Keybridge Capital. Keybridge is run by an interesting guy, Nick Bolton. He's, you can just search up Nick Bolton AFR and you'll get quite a few interesting stories over the past few years.
As interesting as Jean Joubert.
Maybe more interesting.
Maybe not quite as exotic, but in the realm of sort of...
Is he coming Thursday?
Jean Joubert.
We'll see if the invite reaches him.
Trav is at Brewdog Thursday, Jean.
I'll see you there.
So perhaps a bit more vanilla, but still pretty interesting. Vintage Energy is a small gas play with assets in South Australia's Cooper Basin. The company's stock, if you look at the chart over the past year, has been pretty terrible. So it's understanding that Keybridge and Nick Bolton are upset as 5.2% holders in the company. The company's now just capped at $22, so very small. And they've also got a JV partner, Metgasco, to which Keybridge has lent $1.5 million. And they make Vintage look big. They've just got a market cap of $6 million. So the very, very low end of town we're talking about here. So Vintage, just for a bit more context, they produced first gas not too long ago from their Valley field, and they've also been producing from the Odin gas field as of September last year. So they do have the upside of being exempt from the domestic gas price cap, as well as being uncontracted. So they're naturally looking to shine a light on those aspects of the business. So that sort of gives a bit of flavour for the company. And last week they launched a capital raise. They were after $8 million. So 2 went out to instos. The rest was an underwritten entitlement offer.
Mate, it was the discount that was wild. It was like a 40% discount to last in the process.
Huge. And that
and they were kind of pinned on some of the reporting in relation to their half-year accounts, I think, and sorting all that out at the same time. And maybe justification for the discount.
That ties into the, lack of support that management has had, and shareholders being particularly frustrated. So a couple of days after the capital raising is announced, they come out and they say the entitlement has come together. They're going to use the money to drill out Odin 2 and Odin 3. And then on that same day, the company confirms it's received a 249D notice from Keybridge. So the notice put forward is to remove the 3 existing board members and add Nick Bolton and John Patton, who are 2 of the 3 Keybridge board members, onto the board of Vintage Energy. And that's kind of where we're at the moment. Obviously, a lot of the information is relatively private here, but this is sort of playing out. It's going to take a little while to go to a vote to shareholders and whatnot. But I just thought I'd throw the call out to Nick Bolton. We are very interested in hearing your side of the story here. Obviously, companies get a platform. They can put out their presentations and announcement. You can see what they want to say. But we're intrigued to hear what your side of the argument is.
Yeah, normally, if you're a requisitioning shareholder, your only way to get a voice is to leak articles to AFR. But, mate, there's money in mine here too now.
Exactly.
Leak them to us.
You don't have to go and pay proxy people on your part and do all that sort of nonsense.
We're on your side, Nick. We can help you, mate.
We're amenable to hearing both sides of the argument, not just listening to the incumbent directors or the management of a business. So, come and get in contact with us and we can hear what you have to say and hopefully put a couple hard questions out as well around it and get a bit more of a discussion going on around Vintage Energy and all that's been going on the past year.
Oh, love it, JD. Mate, right, boys, you win some, you merge some.
Mate.
Could be a merger.
Do you remember the last time we talked about Winsome, and we got some feedback from some of the Winsome shareholders? They were quite sensitive to that pun. Oh. They were a little bit offended about the win some and lose some. But anyway.
Alignment.
Yeah. Anyway, so they could be winning some more. So I'll just spin it in a positive way for the Winsome.
You could win some other assets.
Win some more. You win some and you win more.
See, it's all happening for the Winsome shareholders.
So Winsome are in trading halt, and when they come out, they've signalled they're going to be doing a webinar on Thursday with the results of some corporate activity that they're doing. So they're doing a deal. We don't know what, but the fact that they're going to do a webinar on Thursday indicates it's a pretty material. Probably a merger or an acquisition of some sort. Keep in mind, Winsome's a pretty decently sized company. I think it's sub $200 million market cap. They got 53 million Australian dollars cash in their bank account as at 31st of December.
They got that raise in at the right time, didn't they, last year?
Yeah, and I guess it just there's an open-ended question, who could this deal be with? What could Winsome be acquiring? And I don't have any answers to this open-ended question. I think we'll probably have to wait to Thursday to find that out. But just bringing up a bit of a map, I'm going to throw in a few potential entities into the ring. So you've got Azimut, their ticker is AZM on the Canadian exchange. They've got a $58 million market cap in Canadian dollars. And a nearby project. You've got Critical Elements Lithium. They've got the Rose project and a $141 million market cap in Canadian dollars.
Look at you getting up on the North American curve track. Jesus Christ. We have officially expanded.
Yeah. And then, here's a real... you've got Power Metals Corp, $62 million Canadian market cap. But there's a real left field one here if you just look at this map of Canadian lithium projects. Moblin. So we've talked, that's obviously a growth project for Sayona. They put out a study on it recently. But I think...
Not sure how far that would have gone to winning them over to buy the thing.
Yeah, no, but I think it was in our conversation with Rusty and Cav where they were talking about the funding dynamics of Sayona and et cetera. And yes, Sayona have plenty of cash so they can... wear a bit of a storm, but even if things got even quite concerning on a cash front for Sayona, they do have that lever of the ability to sell Moblin if they needed to in order to kind of withstand the depressed lithium market. So I don't know, would Winsome buy Moblin from Sayona? Don't know the answer to that question, but I just thought I'd throw it in the ring as well.
On the director's special, if you get 10 referrals, you win some dingo. Oh, I love it. Right, Catalyst Con Note.
Yes.
the old plutonic gold mine, mate. As we said, the most plutonic, one of the most difficult geologies in Australia for gold mine, I've been told.
Really?
You can have gold, then it goes to no gold, and you might think there's a bit of gold, and it turns out to be a shitload of gold. Like the predictive nature of the geology there is friggin' out there, apparently.
Wow.
Yeah. There's just fucking. I've heard stories when they'll just think there's bloody, a couple hundred ounces somewhere, and there's bloody 5,000. Like it's just very unpredictable.
That's insightful, mate.
Mate, geologists, people would froth on that. So what's going on?
This was to do with a bit of news that came out late last week. But I thought, like at the time, I did a little bit of digging, and I think it's an interesting thing to talk about. I mean, Catalyst, they announced on Friday that they've repaid $9 million of a $12 million convertible note, which they inherited from their acquisition of Vango Mining. And recall Catalyst tied up Vango and Superior Gold in like the last 18 months, wrapping up that Mary Meyer gold belt. But they effectively inherited the liabilities and potential kind of skeletons in the closet as a result of acquiring those entities. Interesting to me, the con note was provided by Collins Street, which former guest of the pod, JD interviewed Vass. Now, Catalyst, they basically had to borrow more debt or draw down more debt in order to pay down this con note liability via the existing facility they had in place. So the first tranche of this con note effectively, expired deep out of the money. So Collins Street wants cash back, the money back, instead of converting to shares. And there's still a $3 million tranche outstanding due 17th of June this year, which will, again, likely need to be paid back with cash. But I think I wanted to look at the funding dynamics of Catalyst to sort of see where they're at there in that category of high cost, small scale production. They've got Henty Gold Mine in Tasmania, and they've got, like you said, Maddie, the plutonic gold operations. And we know they're not knockout operations by any stretch of the imagination, but
used to be.
Their share price has had a bit of an uplift in, as the gold price has rallied a bit. So, but I thought their funding dynamics would be interesting. I looked at the half-year accounts, and the 31st of December, they had $19 million cash and $9.2 million in trade receivables. And then you look on the liability side, $51 million trade payables.
Oh, shit.
$22 million debt. In addition to this, there's this gold loan liability to the tune of $10 million. And then there's these call options that they sold, which are kind of increasingly out of the money as the gold price rips, which might have a out of the money value of about $5 million in short order too. So all in all, I look at that, and I think the working capital situation for Catalyst is just one to watch, and it looks a bit precarious to me. It's kind of unfortunate in some ways because they pick up all of these skeletons from the companies as a result of kind of tying up this Mary Meyer belt. So you kind of just love to see them clean up that, the messiness of that working capital situation. And if operating cash flow, keep in mind it's record gold prices, but if operating cash flow can't or isn't sufficient to clean that up, then equity might be needed in this situation.
Big cap raise, maybe.
Maybe.
Not a bad time to do it.
Gold price is ripping, so I don't know the cash flow, dynamics, but the fact that they had to repay the con note by drawing down more debt to me signals that they actually probably might have that they might not be cash flow positive on some of those operations yet for whatever reason. So, yeah.
Yeah, right. The old bloody U-Dogs would be frothing. The old Namibian uranium back up and going. Langer Heinrich.
Yeah, not too much to say. Commercial production, so uranium concentrate being produced and drummed over in Namibia. So a good step in the right direction for Paladin. And, we've also seen some more unfortunate news in a different part of the world in Kazakhstan.
Yeah, the bloody flooding over there. Horrible flooding. Bloody lives lost, damaged, livestock swept away. And from snow melting and heavy rain as well, but a lot of it was from snow melting, which was the same as happened in 2014 as well, which actually impacted the Kazakhstan uranium mines, because everyone was thinking as soon as they saw the flood, is this a possible uranium price spike catalyst? Because as we've talked about, a lot of the world's uranium comes out of Kazakhstan. But from looking at the map showing where the uranium mines are mostly in the south, all bunched together. It looks like one up the north. It appears the north of Kazakhstan was the areas hit by the worst bits of flooding, and some of the west. I haven't found any mention of it being in the south or impacts to the uranium mine. So bit of a chance of mixed messaging going out on the bloody Twitter sphere and everything. So not determined as of yet if it has affected uranium production. But I don't know. But everything, well, the Uranium Insider newsletter said it was mostly in the north. So he would assume he knows what he'd be in the know. You bloody hope so. You got a newsletter on the fucking thing.
You are our uranium expert, our resident uranium correspondent, Matthew Michael.
As I explained. And why is that, Trav?
You're optimistic, mate. You are
aligned.
Aligned. AKA fucking really want it to go up. Right, finish her off. The Blackwater Daunia sale from BHP to Whitehaven appears to be complete.
Yep, pretty big deal for Whitehaven. It's they've got these big met coal assets now in Queensland off of BHP, and it's gathered them a bunch of renewed interest from a certain class of investor. In fact, one of those fund managers wrote up about the bull case for Whitehaven in our publication, mate. The free PDF you get for signing up to the Director Special, which we had, very thoughtful and wonderful contributions from 12 fund managers on what the big bets that they're making right now. And
you got to sign up too, mate. It's not just yourself.
Yeah.
Katana Asset Management. We've had Romano on the pod before, but it was Henrik who wrote the piece on Whitehaven in that publication, and they're pretty optimistic on Whitehaven as a result of this acquisition.
Bloody thanks to all those funnies. That's a brilliant. We might do that again, I reckon.
It's pretty cool.
It was great. Talk about fucking alpha. Unbelievable. Righto, lovely work, boys. Thanks to all the partners. Now, we've got a couple of new ones on this month, and I'm not going to give them away yet. Because, mate, the first ad for any partner,
it's the best.
She's a ripper. You just stay tuned, money miners. Mate, our existing ones that are just bloody support the show and we love them. Verify, give Grant at verify.com a bloody email and get verified. Communicate in 3D. Get wet solutions, mate. Those bladders are going to be fucking everywhere, and so they should be. Give Matty Hall a bloody email. DSI Underground, as we said, ASX 200 mandatory. Anytime exploration, our foundation bloody man, Seamus Murphy, Brooks Airways, and the Brooks Group. And don't forget,
K-Drill.
K-Drill.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.